Hi there, welcome to Kneppy Invest. Time for another viewer selected financial year 23 result video. And today we'll be looking at a company called Perpetual. I probably, if someone was twisting my arm and I had to describe what this company does, I'll probably just say fund manager. That maybe is doing this company a little bit of a disservice because Perpetual Group now consists of about 11 brands across three distinct businesses: asset management, wealth management, and corporate trust. This company actually originated in 1886 as a trustee company for individuals. The next five companies I'll be doing in this series includes EZZ Life Sciences. I've put Elders on hold because they will be releasing their financial year results in November. BHP, eCargo, which I am looking forward to doing a video on because I have no idea what they do, apart from possibly e-commerce because of that E at the start of their name, and then Nanosonics. Now, to be honest with you, I don't have much interest in this type of company, particularly the larger companies that are dealing with fund management, asset management, wealth management, and corporate trust. However, I do have a little bit of interest in smaller companies within this sector. Maybe it's my own bias, but I just believe and think that the smaller companies have a better chance of gaining market share from the incumbent. Now, in saying all that, there is one type of announcement I will look at when this company releases it, or any of these type of companies release, and that is a substantial holding announcement. So we have three types: change in substantial holding, becoming a substantial holder, and ceasing of being a substantial holder. So when a fund manager or just even an individual increases shareholding to above 5%, they have to release becoming a substantial holder. And if that same fund manager then changes their holding, say increases it from 5 to 7% or decreases it from 7 to 5%, they have to do a change in substantial holder. And then if their interest in a company decreases below 5%, they have to release a ceasing of being a substantial holder. So through these announcements, we can see what type of company Perpetual invests in. And this is their announcement list from the 15th of September to the 2nd of October. So this company has released quite a few of these substantial holding announcements. So we can see they're interested in Maxi Parts, Viva Energy, Grain Corp, Macmillan Shakespeare, Bapcor, Helios, and Costa Group. So that is the sort of company that Perpetual is interested in. And to be honest with you, even though I do like a few of these companies a small bit, these are not the type of companies I tend to be attracted to. I do or am attracted to smaller companies and better growth potential companies. So that gives me an insight into what Perpetual type of companies Perpetual likes to invest in. And for those who haven't had a look at one of these substantial holding announcement, this is one of those announcements, a change in substantial holding announcement for Bapcor. So Perpetual owned 35.8 million shares in this company, which was 10.5% of Bapcor. And for some reason, they decided to sell about 4 million shares in Bapcor, decreasing their holding from 10.5% down to 9.4%. And they're probably happy with that little bit of selling of Bapcor because Bapcor's share price significantly dipped over the past week or so. Now, I've already mentioned that Perpetual made a fairly big acquisition of Pendle Group, which is another fund manager, and this was or became legally effective on the 12th of January 2023, so almost 1 year ago. Now, the reason this is important is because as we go through the rest of this company's financial results, you will see a massive uplift in revenue. And the main reason there's a massive uplift in revenue is because of this acquisition. So I don't really like companies who continually do acquisitions unless they divide their growth in revenue and profit into organic and inorganic. And that's very important. I want to know how these companies are growing organically. And if they keep making acquisitions, it's harder and harder to say if they are growing through organic reasons, organic ways, not just through acquisitions. So now on to Perpetual's financial year 23 results. Revenue 1.03 billion, up 38% from last year. Again, that is skewed because of the acquisition of Pendle. Profit, underlying profit, that's very important because their reported profit or statutory profit was significantly lower than 163.2 million, which was 10% higher than the previous profit of financial year 22. Net margins 5.9%, operating cash flow 135 million, free cash flow 110 million, and this company has $470 million of net debt. I don't think that's a significant problem for this company, but I always like to keep an eye on a debt a company has, particularly if the debt keeps on increasing, particularly if the debt has increased because of an acquisition. Now, one of the things I do look at for all companies is increases or changes in book value or equity. And the equity for Perpetual increased substantially from 926 million to 2.37 billion. That's quite impressive. However, because of acquisitions, this increase in equity is because of intangibles, goodwill, that sort of thing. So look at that increase in equity with a grain of salt. Now, return on equity 9.9, return on invested capital 8.9. I do prefer those two to be at least above 10, preferably above 15. But 9.9 is okay for return on equity. It's not overly bad, but still I prefer both of these metrics to be above 10. Shares on issue 113.3 million. Market cap of Perpetual is 2.46 billion. And the company also has a very attractive yield, if that's what you're looking for, 7%. The PE ratio of Perpetual is 15.1. Now that is using underlying profit. Remember, underlying profit was, what was it, 163.2, and the market cap of this company was 2.46. Now, if you use the reported profit, which was $60 million or so, that would mean the PE ratio of this company is something like 40. So you do have to be careful what sort of earnings or what earnings you do use when you calculate the PE ratio of a company, because 15.1 is significantly different than 40. If you saw the PE ratio of this company was 40, you might say, well, Perpetual is significantly overvalued. Now, should you use a PE ratio? Well, it remains to be seen. Or should you use the price to book ratio? And currently, the PB ratio for Perpetual is 1.04. Now, it makes a little bit more sense to use a price to book ratio in determining the value of this company. So if the price to book ratio was 0.7, that means the assets of this company are significantly or valued significantly more than the company itself. So I do think you should sway towards using the price to book ratio over the PE ratio and the EV to operating cash flow, which is 21.7. Also did a reverse DCF based off the operating cash flow to justify the current valuation. Perpetual would have to grow at 15.3% per year. That does seem to be a little bit high for this company. So I'm looking at that number with some dubious eyes. One of the things I like to look at for all companies, no matter what company it is revenue and profit history, particularly focusing on revenue first. So what I want to see is revenue increasing through time. And in this particular chart, we have revenue and profit for Perpetual going back to 2014. So the first thing I look at is revenue. And from 2014 through to 2020, revenue really did nothing for Perpetual. In fact, between 2015 and 2020, revenue actually went down from 510 million to 491. But revenue has really spiked up the last few years from $491 million to above $1 billion. And one of the reasons behind that spike in revenue is because of acquisitions. But if we look at profit, we can say profit has done absolutely nothing over the last 10 years. In fact, in the last year, the reported profit for this company was $59 million. So I thought it was about 60 million, so a little bit less than what I thought, which was the lowest this company has reported in 10 years. But remember, there is a difference between underlying and reported profit. And the reason there is a significant difference between underlying and reported profit, I'll touch upon in a second. And here it is, directly from the company, why there's a difference between underlying profit and reported profit. 160, how do we get from 163.2 million to 59 million? One of the biggest reasons is because of transaction and integration costs. Not only of Pendle, 63.1 million, but also of Trillium, 3.5 million, Barrow Hanley, 5.4 million, and other $8 million. We also see a non-cash amortization of acquired tangibles. Not sure if that's going to be a one-off or if we're going to see further non-cash amortization of acquired tangibles over the next few years. Also, we had a net unrealized losses on financial assets. So altogether, these one-offs account for over $100 million of the difference between underlying profit and reported profit. I prefer to judge the performance of this company by looking at underlying profit. not reported profit. And this is another thing I actually found interesting in the company's presentation. Where do they put their money? What asset classes? So significant amount of assets under management, $212 billion. So where do they put their money? Australian equities, $28.9 billion. Global international equities, $69.8 billion. US equities, $52.3 billion. UK equities, $8.8 billion. European equities, $1.5 billion. Emerging markets equities, $8.1 billion. Australian income fixed or fixed income, 10.2, US fixed income, 10, multi-assets, 9.7, cash, $12 billion. So by far, well, no, maybe not by far, but if you do look at where they put most of their money into, we're talking about equities, 169.4 million out of the 212 million, particularly focused on global, international, and US equities. And finally, we're going to look at the chart for this company. And this is actually the monthly chart of Perpetual, going all the way back to 1996. Yeah, 1996, actually 1995, when I was still in university. Can you believe? And from 1995 all the way through to 2007, just before the GFC, this company was one to hold. Share price actually increased from something like $5 all the way to a high of $82.50. But this is not the sort of company you have wanted in your portfolio since 2007, because the share price has fallen and has not reached its highs from 2007. Not only that, one of the reasons I had started paying attention to the chart for this company is because the share price was almost about to fall below $20. And at $20 is a significant support level for this company, because that level was the lows we saw back in 2012. The share price during the GFC fell almost to $20. And during the COVID-19 financial panic, the share price of this company fell to $20. So $20 is a quite important, significant resistance or support level for this company. And if you see $20 broken, that will be really, really bearish. That's all I have for this video looking at Perpetual's financial year 23 results. If you have any thoughts about this company, maybe you're a shareholder of Perpetual, I'd love to hear your opinion of how this company is performing, this fund manager. So leave your thoughts in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.